Welcome back, pure structure traders, for another market analysis for the London session and potentially into the US session. Today is May 12th, 2021 here in Hawaii, and will be May 13th, 2021 in London. Today we'll be going over S&P 500, gold, and also giving you some levels on oil as well. And potentially those levels can hold up as well through the London session into the US session. With that, guys, if you guys do like these videos, please go ahead and smash that like button. If you guys are not subscribed to the channel, please go ahead and subscribe. For those who have any questions, feel free to pop them in here on YouTube. Again, we would love to get back to you. I know a couple of you have asked some pretty good questions, which I'll probably touch up on a couple of them here in the market analysis before we move over to gold. So we'll start with S&P 500 first for you guys. So we had nice downward movement. You can see we came to a key level of 40, 51, 25 as support, and nice double bottom support to bounce right off that area. You can see we come right back to a prior level of support as well, which is those 40, 71, 25s, and we're kind of on top of it right now. What we want to see is either price hold this level of support here and then continue to move up, or come back underneath this level and then try to pull right back down from there. So we will have some opportunities. We could see the support coming right here at 40, 51, 25. That could be a nice bounce. Maybe look for a double bottom here and a nice move right back up to resistance. Again, my next long is on top of 40, 71, 25. If I don't get that area, there is some areas in between. You could have these little bit of levels right here that could show up. I would be targeting somewhere around that area though, somewhere between these 40.83 and then potentially as high as 40.88 as resistance. If we do try to go to the upside, that's going to be the top peak there. From there, next level to try to target is these 40.99s, and then above that 41.10.50, which price was a little bit above that today. A little bit of a choppier movement happening on S&P in the beginning, but there was some very good opportunities to take the trades from for the US session, which we were in this morning in the room. Has some good opportunities there. Gold kind of chopped around a level that we'll kind of go a little bit further into on gold when we pull up the charts. But for S&P 500, again, either support for me 40.51.25, resistance 40.71.25, and if that holds on top, that should be our support to try to pull it up from there. You can see some levels above 41.29.25 and then 41.49.75 also has some levels. But before we move over to the smaller chart, I know one of the questions we had here on YouTube was 41.37.50 a level that we could have potentially had? And of course, that for me is definitely a decent level. We could have, the reason I didn't pop it up in yesterday's market analysis was because I didn't want you guys to get chewed up too much in the middle. And you can see that could be an area where, unless you really understand the micro, because this would be a micro level for me, unless you really understand the micro levels, it's better that you pinpoint the exhaustive levels first and then look to trade them from there. But these 40, 137.50s, definitely a decent area. If you pop it up, you can see support happening, resistance happening, and then resistance back over here for a pull down. So not a bad area at all. I just liked the more exhaustive areas of 41, 49.75 to 41.50 even as levels of resistance to kind of double top in from there, to be able to understand a direction off of this level. If you don't take it right at these 41.50s, it doesn't matter. The idea here is to understand, okay, is this price rejecting? Is this price rejecting? And then you can look for a continued move after understanding the exhaustive move. So again, very good question that Labora had on YouTube here, which wanted to address here in the market analysis. I thought it was an excellent question. Again, this is his level 41.37.50 area. You can see the support happening here, support happening there, resistance there, and resistance here. For me, it would be easiest to understand how to trade this level after you see the move at the exhaustive level. So if you guys don't understand how to differentiate the major from the minor levels and how it's best to try to trade them, again, feel free to ask the questions. If you guys want us to start to do some market structure videos up here on YouTube, just feel free to leave us some comments, some of your feedback. If that would help you guys out in trading, we can do that for you guys. start to post up some market structure videos for you guys to better understand here on YouTube how we look to trade our levels, and how we understand the market when it develops minor and major levels as well. So if not that, you can always join us within Pure Structure Trading. We do offer coaching courses and sessions that you could sit down and learn this stuff with us as well. But with that, guys, let's move back into going into the smaller chart here on S&P 500. So let me try to pull that up over here. Let me just delete this off here for a second. Okay, let me pull up a smaller chart here on S&P so you guys can see where we're currently at here on S&P. I wonder if I'm in the right area. Let me see here. Nope. Let me pull it over for a second. Move it over to where we're currently at here on the chart. There we go. Okay, so up here on this chart, you can see price kind of bouncing between this area right here at 40.7125. Now again, we're on top of the level, so it wouldn't be wrong to try to go long from this area because this is prior support, resistance, and potentially maybe a support to continue to move. Now price gets back underneath this level. This is where we're looking for this rejection to happen and then try to pull price down a little bit deeper back into more of an exhaustive support at 40.5125. Again, if you missed that move or you're not confident in taking that move, you can always look for these exhaustive levels here off the bounces. Watch the price actually support the idea and then try to move it back up from there. So could be some good opportunities of trade on S&P. Again, you want to make sure you look for your setups and understand what you're looking for. This is process based, not outcome based. You got to be process driven, meaning you got to make this stuff mechanical. You got to know exactly what you're looking for before you put yourself into the trade. And if you don't know that, if you're not confident in it, don't put yourself into trades. You're only going to end up losing more money. It's not going to lead to you making more profits here. You got to be able to not only understand your levels, but understand how you're going to trade your levels, what you're looking for when the market gets to your levels and presents the opportunity. At the point in which you're going to trade and click the button, that should be the mechanical part, meaning that should be something that doesn't involve so much emotion or so much thought of, oh, maybe this might do this or that. It doesn't involve so much critical thinking. It just more so involves, okay, this is what I want to see. This played out. Let me click it. All right, let me get into the trade. Or I didn't see what I wanted to see. Let me just stay out of it. The way to deal with emotions here, and I've talked to a lot of traders in pure structure trading when I was trading with Trade Pro Academy and teaching a lot of their members, and outside of this stuff, talked to a lot of people who've traded. In trading, the way to alleviate that psychological aspect, the one that hinders your performance or that could sabotage you, that emotional part of it, is to make sure you have some type of game plan, some type of way that you're going to attack, how you're going to set up your session, how you're going to mentally prepare for your session, where you're going to be trading. There's a game plan and then there's a trading plan. These two things need to be separated. If you don't understand this, come coach with us, come train with us. We could definitely break that down for you to give you a better understanding of why you want to do it that way. Because if you're not mentally prepared for this stuff, then your trades are just going to suck the majority of time. And this stuff can suck the life out of you too, and could definitely put you in an emotional downward spiral of things. So you want to be careful with this stuff. You want to make sure that you understand how to mentally prepare yourself and also how to create a trading strategy or plan that is going to work best for you, that makes you the most comfortable, that makes you the most certain about the trades, that helps you understand whether you performed well or you just didn't perform well at all, right? Those things are important, but you learn that over a period of time of not just watching charts, but also trading, back testing, and then looking at the results, trading, back testing, looking at the results over and over and over again, right? So there's a lot of things that go into it, but it takes longer if you're trying to do this on your own versus working with people that's been through it, because they can kind of help take that edge off of the that trading roller coaster you go through, that S curve that they're always talking about, all of those emotions of ups and downs that you go through. a lot of times if you're around somebody that's gone through it already, that knows how to overcome it, that knows what you're supposed to be doing, what you're supposed to be looking at, and that tries to help you stay, in line with, your rules, your trading plan, and stay in line with discipline and how much trades you take. A lot of times that tends to lead to more consistent results, successful results, that said. But with that said, guys, again, let's get back into it. 40.7125 is going to be our support that we're looking for the market to climb higher. Underneath that, it could potentially react as resistance. If you don't like the level, don't trade it. Look for your next level. If it comes down here, 40.5125, can't break it, look for the long. All right. If it's above, look for the market to come to its next couple levels. Let the market's movement that's already happened be your roadmap to where the market potentially could go. All right, guys, let's go ahead and pop into gold here real quick. Let's pull a chart up here on gold, give you guys some levels on that. So for gold, again, nice movement. This is where we chopped around this morning. And wanted this level of 32.8, but you can see market came up a little bit higher, was touching right at this area. Would have been a better level, but it wasn't one of the levels I had on my chart. I had these 32.8s, and after the fact, it started to reject that level nicely and then pulled down. Was targeting these 26s. It came down deeper, came to our next level 21.7, and you can see came to our very next level underneath that 1813.2. Now, for those of you that are hesitant to trade your levels, understand this. You watch me do this every single day. I pop up these market analysis. If you were to just review the videos and look how often the markets actually come to these levels, that alone could show you how well you could be doing this if you just understand where where the market is trying to develop its movement in the direction based off of what you're seeing it do at your levels. All right, so these are powerful stuff. And honestly, this is what we do every single day. Right, so for gold, again, we're looking for that support 1813.2 as the support. Want to see if the market gets down here. Now, could we have a little bit of a level in between? Sure. Right here, 1817.3. This could be maybe the neckline of the double bottom and continuation right back into that 21.7. If we can't get through it, might get a nice double top and then return right back to support. And this could be the range that we play in, right? Market could also come right back above this level at 21.7 and then try to continue with the bounce to its next level of 26. Market could come underneath this level of 13.2, reject as resistance and continue down. There's so many different opportunities that you could have as a trader, right? But you want to make sure that you're not trying to take every single opportunity the market presents, because it presents a lot of opportunities. You want to strike within trading the chart. You want to strike at the areas that you can best understand, and only strike when you understand what you're looking for. Right? If you see it happen, your job is to perform the trade. If you don't see it happen, your job is to stay out. If it's happening away from your level, your job is again to stay out. You only trade at your levels. It's the best advice, honestly, I could give to almost everybody that I know, and everybody that I don't know that likes to watch these videos. It's one of the best advice that I honestly could give you. Make sure you trade your levels and learn to be confident in that, trading your areas. Right? So we're going to allow this thing to either bounce here at these 17s or come back down to the exhaustive area. If not, let it return back up to this resistance here, 21.7. And if it rejects it, this could be a great opportunity for a continued short right back to the middle and then to the exhaustive area again. Same thing with support, back to the middle, bounce, back to the exhaustive area. Could play between those ranges, but again, we've had these levels up for almost a couple weeks. We've had these levels up for, well, at least a couple days in this week, and they've worked out very nicely. Sometimes when it's choppy between the level and it's hard to see, you just got to make sure you discipline yourself enough to know that you shouldn't be putting yourself into something you can't really understand. All right. With that, let's take a look at a smaller chart here, guys. All right. So for gold, you can see on this smaller chart, we're kind of right in that level that we were talking about, those 17s. A little bit of support happening right here that could curl this market right back up. But again, this is right in the middle. harder area to trade. You don't like all that choppiness, don't put yourself into it. Wait for the market to come down to that support or come up to that resistance. Above that 26, above that 32.8, 39.5, 43.8, 45.5. Support underneath this, mine comes all the way down at 1798.3, then 1795.7. Could be some levels in between, but that's going to be more of my exhaustive levels. But we'll see if the market can actually break out of this range during the London session and maybe even potentially into the US session. We'll see where we're at. With that, let's take a look at oil for you guys. Again, very nice levels on oil too. Worked out very nicely. You can see we touched our measured move 66.58. We had another measured move above that 66.80, but it couldn't break and hold this as support. Just rejected it 1, 2, 3 times. Nice triple top, moved the price right back down. So you can see levels that we put up on the chart held nicely. Nice bounce right off this area of 65.46. And what do we look at for gold? I mean for oil. For right now, we're underneath this level 65.46 and we could potentially reject it and continue lower. Now our support, for me, this support is going to come in somewhere around 64.98. Now someone could ask if there is a level in between this which could hold right here. There absolutely could be one. For me, I'm not going to put that level. It's not much of a level, though it could be something that bounces the price right back up, and it did. I'm looking for something that's more clear, which is going to be right around these 64.98s. If that holds the support, this could definitely be an area that I find interest in buying right back up. You want to go on the short side. Your shorts are going to be here at 65.46 as it holds resistance, or let price grow back up into these 65.85s and fail to get through. Get that rejection and then try that downside from there. Again, above that 66.22, above that 66.58, and then a measured move to 66.80 as our very top move above that. The supports underneath 64.98 will be 64.52 and then 63.91 as support. Again, you are looking for the market to catch the support there and then look to trade for it. Let's go ahead and take a look at a smaller chart on oil as well. So again, guys, you can see the rejection happening here on this smaller chart on oil. And again, want to see a couple, if someone wants to see a couple rotations and rejections, that's absolutely fine. If you get it, couple pin bars, that could happen too. But bottom line is if it stays underneath this 65.46s, that should be a decent area for a continued short down to your next level of right around 64.98. But with that said, guys, that is it for S&P 500, gold, and also oil. Hopefully you guys enjoyed these videos. If you guys do, please go ahead and smash that like button. If you guys are not subscribed to the channel yet, please go ahead and subscribe. Again, any questions you guys have, feel free to pop them in here on YouTube. We will get back to you guys. And some of the questions I will address here on some of the videos, whether it be the market analysis. Also look out for the midweek weekly recap for the micros challenge that we're having right now. For the small account, we're going to be putting that up, and I'm going to give some advice as well when it comes to trading, show you some of my trades that we took this week and where we're currently at in profits and where we kind of started and where we're currently at. So look out for that video. But as of right now, guys, that's it. Wrap it up here for the market analysis for the London session. Again, these levels could potentially be used into the US session, so we'll see what happens when we get in there. With that, guys, if you guys are going to trade tonight, I will see those who are part of Pure Structure Trading inside the London session. I look forward to seeing you guys in there. For those who are not, if you guys continue to trade tonight, make sure you guys trade well. Let's have a great night. Bye.